In this video, we're diving into how Mercury and Silicon Valley Bank stack up when it comes to business accounts and startup banking features in 2025. What's going on, everyone? My name is Eric Hunsaker, and on this channel, we cut through the fluff to help you make smarter business decisions without getting buried in financial jargon. Now, if you're trying to decide between Mercury and Silicon Valley Bank for your startup's financial setup, then you've probably seen a ton of opinions floating around the internet. But what actually matters? What features really make a difference when you're just trying to grow your business? Quick note here. This video contains affiliate links. If you sign up through them, we may earn a commission at no extra cost to you. That's exactly what we're going to break down in this video. So let's get into it. Mercury versus Silicon Valley Bank. Quick background. All right, before we dig into the feature by feature comparison, let's set the stage with a little context. So Mercury is a financial technology company that provides business accounts through partner banks. And just to be clear, and to keep things compliant, Mercury is not a bank. Banking services are provided through Choice Financial Group, Column NA, and Evolve Bank and Trust, members FDIC. SVB, or Silicon Valley Bank, is a more traditional banking partner. They've been around for decades and are best known for working closely with startups, VCs, and high-growth companies. Both of these companies cater heavily to startups, but they take very different approaches. Account setup and requirements. Let's start with the basics here. Actually opening an account. With Mercury, everything is done online. The sign-up process is fast, and as long as your business is US-based and not in a restricted category, you can get started with no minimum deposit, no monthly fees, and no in-person paperwork. You'll get access to checking, savings, and virtual cards once you're approved. SVB, on the other hand, tends to be a bit more old school in how they handle new accounts. Now, while they've streamlined some parts of the process, you may still be asked for phone calls, specific documentation, or even in-person meetings depending on your business structure or funding. Mercury definitely wins the convenience round here, especially if you're setting up an early-stage startup or you just want to move fast. Fees and minimums. So Mercury doesn't charge monthly fees. There's no account minimums, no overdraft fees, and no fees for domestic wire transfers. The only real charges come from things like currency conversions or sending international wires. Now, SVB does charge fees on certain accounts, especially if your average balance drops below a certain threshold. They offer different tiers of accounts, and while some startup-focused packages are low cost or fee-free in the first year, those benefits may expire or change as your company grows. Bottom line, Mercury is far more transparent and simple when it comes to fees. If you want something easy to budget for, it's a solid choice. Software and dashboard features. Now, this is one of the biggest differences between these two platforms. Mercury puts a lot of effort into building a modern dashboard that makes managing your money feel less like doing taxes and more like using a clean app. You can view cash flow, transfer between accounts, create virtual cards, set team permissions, and even access tools like Capital Insights and Venture Capital Connections, all from one place. SVB's platform is functional, but it definitely feels like traditional banking software. It works, but it doesn't wow you. Some of their newer offerings, like SVB Go, are meant to address this and provide a better online experience, but it's not quite as intuitive or startup friendly as Mercury's design. So if you're a founder who appreciates slick tools and self-serve options, then Mercury has a big edge here. Integrations and API access. All right, now let's talk about how well these accounts play with the rest of your tech stack. Mercury integrates with accounting tools like QuickBooks, Xero, and Plaid. You also get access to a developer-friendly API, which makes it easy to automate stuff like expense tracking or transfers if your team is a bit more technical. SVB does offer integrations, but they tend to be more limited or require some manual setup depending on your account type. And while they do have API capabilities, they're not as openly as accessible as Mercury's. So if automation and tech flexibility are high on your priority list, Mercury gives you more room to build and connect. Customer support and relationships. One thing SVB does get right is relationship building. So if you're a high growth startup, especially one with venture backing, SVB often assigns you a dedicated rep who can help with funding, capital introductions, or more personalized support. Mercury's support team is friendly and fast, but you'll usually chat with someone via email or support tickets. With Mercury's Pro plan, plan and at a certain cash balance, you get a dedicated relationship manager, which is handy if you want someone in your corner like with SVB. So it really depends on what kind of support you want. Mercury gives you fast answers. SVB gives you more hand-holding if you need strategic guidance. Lending, credit, and venture support. This is where SVB historically shines. They offer venture debt, credit lines, and lending solutions designed specifically for startups. If you're looking for that kind of financial relationship, especially post-Series A, SVB has been the go-to for years. Mercury's lending is limited to e-commerce, working capital loans for now, and they support you with finding access to other options through their capital team. So if your priority is building a deeper financial relationship with a lender, then SVB still holds the edge. But if you're bootstrapping or raising capital through other channels, Mercury still covers your basics just fine. FDIC insurance. We need to cover this part clearly. Mercury is a financial technology company, not a bank. Banking services are provided by Choice Financial Group, Column NA, and Evolve Bank and Trust. Through these partner banks, your deposits are FDIC insured up to the legal limit. SVB is a traditional FDIC member bank, so your deposits are directly insured under their institution. With both, your money is FDIC insured, but thanks to Mercury's partner banks and their sweep networks, you can access up to $5 million in FDIC insurance. Global payments and international use. If you're doing business globally, it's worth knowing how these platforms handle international payments. Mercury supports international wire transfers, and they're transparent about their fees. You can also open an account from outside the US if your business is incorporated in the US and has a US-based representative. SVB also supports global banking, but depending on your account type and structure, you may face more hoops to jump through. They've historically catered to companies scaling into international markets, but it's not always startup friendly right out the gate. So for simple, early stage international transfers, Mercury is probably the smoother experience. For long-term international scaling, SVB may offer more depth, user experience, and design. Now let's not pretend this doesn't matter. Using Mercury feels modern. It's fast, it's clean, and it doesn't make you feel like you're trapped in a spreadsheet. You can onboard your team, set up permissions, and track activity with just a few clicks. Now SVB has made improvements with their newer interfaces, but they're still playing catch up in the user experience department. If ease of use and clean design are must-haves for you, then Mercury wins hands down. So which one should you choose? Where does this all land? If you want something modern, low maintenance, and built specifically for early stage startups, then Mercury is a fantastic option. It's fast, flexible, and actually pleasant to use. Plus, you avoid a lot of the traditional banking headaches. If your startup is growing quickly, raising large rounds, or wants a more personalized relationship with the financial institution, SVB is still a strong contender. Just be ready for a slightly more traditional process and interface. Honestly, it might even make sense to use both. Some founders open a Mercury account for day-to-day operations and a separate SVB relationship once they're working with VCs or scaling globally. Just don't overthink it. Pick the one that fits where you are right now, and you can always evolve later. And again, Mercury is not a bank. Banking services are provided through Choice Financial Group, Column NA, and Evolve Bank and Trust, members FDIC. Now, if you want to get started with Mercury, we've got a link for you down in the description below. This is an affiliate link, which means we earn a small commission when you use it at no extra cost to you. And these commissions really help support the channel and allow us to continue to create free content just like this. So if you end up using it, we thank you so much in advance. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on the channel, we're dedicated to helping new and existing entrepreneurs get started and succeed in business. So be sure to subscribe. But other than that, thank you so much for watching. We'll see you here in the next video.